Your budget is unique to you, but there are some proven methods that can help you get started, like zero-based budgeting and the 50-30-20 budget. There are also popular mobile apps that can help automate the budgeting process for you. Let's go over zero-based budgeting and the 50-30-20 method first.
A zero-based budget operates under the principle that every dollar you earn should go toward a specific purpose. Let's say you earn $3,000 a month. With a zero-based budget, you'll need to assign every dollar toward an expense. It might look something like this. Rent, $950. $250 for the car payment. $100 utilities. $400 groceries. $300 savings. $300 IRA. $75 gas. $200 dining out. $70 phone. $125 internet. $80 movies and concerts, and $150 for insurance. As you can see, everything from gas to groceries to dining out is accounted for in a zero-based budget. Rent, car payments, insurance, and retirement contributions too. All of these expenses add up to exactly $3,000, which leaves $0 left over, hence the name of the strategy. With this in mind, you have to adjust your budget each month to account for changes. For example, if you have to pay $200 for an unexpected car repair, you'll need to reduce expenses in another category like dining out. Or if your gas bill is lower, you'll need to put those funds toward another purpose. As you can see, zero-based budgeting requires thoughtful consideration for every transaction that you make. It's intense, but if you have the tenacity to keep up with it, it's a great way to get in front of your finances. The 50-30-20 approach simplifies budgeting into percentage breakdowns, with 50% of your money going toward your essential fixed cost, 30% going towards your wants, and 20% going towards your savings. The best part is that it doesn't require daily adjustments. Consider the 50-30-20 guide for someone who makes $3,000 each month. 50%, or $1,500 in this example, can collectively be spent on housing, food, transportation, insurance, loan payments, and any other necessary cost. 30%, or $900, is slotted for services and products that are nice to have but not essential. This would include dining out, going to concerts, watching movies, and other activities that aren't considered must-haves. The remaining 20%, or $600, should go towards your savings, which includes your short-term emergency fund and your long-term retirement investments. The 50-30-20 method makes it easy to quickly adjust your spending. For example, if you immediately find that your essential costs are more than 50% of your income, you will immediately recognize the need to rein in your wants budget and limit your spending on entertainment. Whichever budgeting method you choose, there are a number of digital apps that can help you track your monthly progress. You don't have to do the math. Apps can do it for you. This might surprise some folks, but the first place to look for budgeting assistance is actually your bank's mobile app. Many financial institutions offer complimentary tools that analyze where your money is going and offer weekly and monthly breakdowns of your spending. In addition to your bank's app, there are several free or low-cost apps and tools designed to help you make better money management decisions. Many of these apps allow you to sync all your financial accounts to get a full picture of your money, as well as budgeting calculators, spending trackers, and alerts when you're pacing to go over budget. These capabilities help keep you on track and save you time by doing much of the budgeting busy work. If you already have a million apps and don't really want to add another to your smartphone, you can also reconsider where you store your money. Some fintech companies and digital banks offer accounts that deliver a convenient solution, a place to keep your money safe with automated tools that do some of the heavy lifting of a budget for you.
Apps can make budgeting so much easier, but what if you don't have a regular income? For all the gig economy workers out there, like freelancers or rideshare drivers, budgeting can be tough. But there are still ways to manage a budget, even if your monthly income varies.
For the millions of Americans who participate in the gig economy, budgeting poses some unique challenges. If your income is prone to wild fluctuations, your best bet is to stockpile as much cash as possible. Since you don't know how much you might earn in a given month, saving at least 6 months' worth of your expenses will help you stay afloat in case the work dries up. That's the ideal scenario, of course. Building savings takes time. You'll want to find banking options designed for your lifestyle too. For example, some banks, like Ally Bank, allow you to divide a savings account into subcategories, which can be especially helpful for making sure you're setting aside enough money in your budget to pay your taxes. You could also use an account built for your lifestyle. Lily, for example, partners with a bank to offer a mobile account designed for freelancers.
Whether you go with a zero-based budget, follow the 50-30-20 rule, or roll with some hybrid solution, as long as you have a strategy and you stick with it, you should be just fine. Plus, a budget is never set in stone. Be sure to jump over to Lesson 3, the last video for this course, where we'll go over how to tweak your budget.